Greetings and welcome to the ROI Clear podcast. This is Ray Hightower, and today we are fortunate to have as our guest Mr. Stewart Heath. Stewart Heath is CEO and founder of Harvard Grace Capital, and I'll tell you, Harvard Grace Capital is in the business of helping people accelerate their wealth through turnkey real estate investing that creates passive income, minimizes risks, and maximizes tax efficiencies. So we're going to get into all of that with our guest, Stewart Heath. Welcome, Stewart.
Thank you, Raymond. It is such an honor. Really appreciate you having me.
Glad to have you here. Really glad to have you here. And it's been good getting to know you a bit, through what we're doing at Raise Masters. I know you're in New Orleans right now with Raise Masters right now. So that's wonderful. And I'm glad you took some time to break away so that we could do this quick interview. Why don't we start off with an elevator pitch? And for those who are new to ROI Clear, Stewart Heath is on an elevator with someone he wants to influence. So I'll ask you, what would you say to that person in the course of an elevator ride?
Oh, I hate the elevator pitches, but I would say everyone should be investing passively in real estate with at least a portion of their portfolio that is for stability and predictability as a core piece of their investment portfolio.
Okay. And at that point, I'm sure they'll want to dig in, because you and I have both found that when we tell people that we're in real estate investing, many times people are curious and they want to drill down into that. So if I was on that elevator, let's say, and we're beyond the elevator pitch. Let's say we're having a discussion now. The elevator doors have opened. We're out in the hallway right now. So we've gotten past, as you mentioned, you hate the elevator pitch. So now we're walking down the hallway. So yeah, Stewart, tell me a little bit more about this. What is it about that real estate that attracts you?
Well, there's 5 things that I like about real estate. There's tax advantages. Everybody talks about that, and that means something more to some investors than it does others. You can invest in real estate through your IRA or your 401k, so the tax advantages aren't going to do you any good in that case. Real estate tends to be more stable. Now, I'm not talking about developments. I'm not necessarily talking about value add, fix and flip type things, but what we focus on are cash flowing, stabilized properties, and those tend to be very stable. How many of us have looked at our 401k today? It's we're recording this on October 6th. Market's just having a banner month, isn't it? It goes up and down, and I'm not against stocks. I have stocks. But I'll tell you one thing that I began to notice several years ago as a CPA and looking at clients is, virtually every family office you're going to come across has a core position in some real estate, usually multiple. That's not the things they talk about. Frankly, real estate can be very boring. But that's kind of what investing should be, in my opinion. I mean, I'm older now, and I've had I've had ups and downs, and right now I'm just really focused on stabilized things that throw off cash flow. The tax benefits are great, and to me that's true investing. You're not going to get your 40% IRRs from those, but you're going to get a solid 2022 out of that with no real excitement, and you're not going to lose any more hair. So that's why everybody should be looking at real estate. So there's tax advantages, there's recurring cash flow, there's stability, and one thing I always throw in there, you should be investing in real estate with some professional managers too, because everybody, they think they understand real estate, and just because you might have bought and lived in a house doesn't mean that you're the best person to operate an apartment building. And most people are experts in their own profession. I'm not going to come along and try to, become a musician or start writing music just because, maybe I have a good singing voice or something. That doesn't make me a performer. So I would say, invest in real estate with professional management, and that's where you're really going to maximize your returns.
Right. Yeah, we all we need to pull in specialists in whatever we're doing. We can be a specialist in whatever it is where we're especially gifted or trained, or where we've spent time acquiring experience. So,
yeah.
But at the same time, it helps to pull in specialists in those areas where we don't have knowledge.
Right.
What
Absolutely.
asset classes do you like? Like you alluded to this a little bit. You said just because someone owns a single family home does not mean that they're going to be an expert in managing an apartment property. What asset classes in real estate do you like? Are you doing retail, office, industrial, multifamily? Where do you specialize?
We consider ourselves asset class opportunistic. We do focus on a geography rather than asset classes. But I love multifamily, even though we don't own any. Going back to my previous thing of our principles, we like stabilized cash flowing. Most multifamily properties seem to be overpriced, from our standpoint, so that they will not cash flow day one. And that's because they're very popular assets. Not everybody is looking to generate cash flow from day one. So we are competing with, family offices or other institutions who aren't necessarily worried about cash flow, but they're trying to maximize, returns 5 to 7 years from now. And then there are operators who will provide that cash flow, but they're raising more money from their investors so that they can turn around and pay it back out to them. That lowers overall IRRs, but usually investors know that and they're okay with that.
Yeah.
So, but we don't do
flow.
that. They want the cash flow.
And that's something certainly that would need to be disclosed. I know some people would be upset if they knew that was the operation, but
I have found that most people do know, but they're okay with it. They realize, yes, I'm giving you more money to pay me back with, and
sure.
But they like the regimen of it.
Okay. Now, how does your experience as a CPA inform what you do with real estate investing?
A good question. To me, real estate is always about the numbers. I like real estate because it is relatively simple at a certain level, and there are 4 or 5 classes of expenses that all real estate's going to have: management, insurance, repairs, maintenance, property taxes. And so it's easy to analyze one property against another, but I just think that real estate lends itself easily to my analytical skills and the recurring numbers of it all. I think people a lot smarter than me, can do tech, and I'm happy to be a shareholder in some tech companies, but I don't always get it. I've never done crypto. Probably not ever going to do. I'll just say I just understand real estate, and I don't do things that I don't understand.
Yeah. There it is. And with crypto, I was reminded, somebody made the comment about crypto. This is right when Bitcoin first came out. This was, I don't know, it's maybe 10, 12 years ago, maybe a little bit longer. And I was talking to a guy about investing in crypto, just understanding what his thoughts were. He said, given a choice between investing in crypto and flushing my money down the toilet, I'd rather flush my money down the toilet, because at least then I understand where my money's going.
That's funny. Yeah. I mean, I have investors who've made several $100,000 doing crypto. I mean, so,
yes.
And it's always 20/20 hindsight. Do I wish I had bought crypto 20 years ago or 15 years ago? Yeah, sure.
Oh yeah.
But again, I don't understand it. So.
Sure, yeah, all of us. I love crypto as a tool for managing business processes, like for title companies. I think it's going to be wonderful for title companies maintaining chain of ownership, or in the legal profession, maintaining what do they call it in evidence? Chain of evidence. There's a term they have there for
blockchain. Yeah. Now, I do understand the blockchain technology that cryptocurrencies are based on. That's going to have a huge impact in the next 5 years on real estate. It's going to allow all these private, unit holdings to be able to be sold, through exchanges. It's gonna be fabulous. It's gonna be a sea change for us.
Right. Yeah, there are opportunities. What are some other ways that you see blockchain affecting the real estate industry? Sounds like you've spent some time thinking about that.
We spent quite a bit of time at looking into really solving the problem. I think real estate as an asset class has one disadvantage to other investments. That's liquidity.
Yes.
So I think blockchain utilized with a combination of Reg A as well as Reg D 506 offerings. It's going to be a technology that's going to bring to your average investor the ability to buy and sell. And there are already exchanges in place. Of course, if you raise money through a Reg A, through like an arrived.com, if you've taken a look at that one, a Reg A offering is a backdoor public offering. Those shares are already public. Whether or not there's an exchange that makes it easy to buy and sell, I don't know. I haven't seen that. Some people say that they have that, but I think that's coming probably in the next 5 to 7 years, probably before 2030. I think that's going to become quite commonplace, and that I predict that will be another sea change moment for real estate investors, because the only place people have to do that right now is the stock market, the bond market.
Yeah, sure.
One of my pet peeves is that they call us the alternative investment. They lump real estate in with art and crypto and stuff like that. No, guys, we're the original asset class.
Sure. Right.
You are the alternative. And I've been riffing about this for a year or so. And it's just, I really think once it becomes available to buy and sell private real estate shares easily, I think the stock market, will be hurt. It's not going to go away. It still has it still has a purpose. It's a great way to raise capital for your operating company. But I think you'll just see a lot more people investing in real estate when it becomes a little easier. So.
I love the language game. I hadn't considered that until you said it, that we're considered the alternative. That is fascinating.
Drives me crazy.
Okay. Well, thanks to you, I now have something else to drive me crazy too. So thank you for that.
You're very welcome. You're very welcome.
The way that comes. Now, how do you decide to do a deal or not do a deal? Can you walk us through, please, your acquisition process and your evaluation process?
Yeah. Again, we're asset class opportunistic. So right now, our current holdings are suburban office, medical office, and storage. First, we look at our geography, because we property manage everything that we do, and therefore it has to be, we have to be within an hour of it. And then it comes right down to the numbers, and it needs to have obviously positive cash flow. At a price that that we can obviously cover a debt service at 75%. We may not finance it up to 75% LTV, but we'll underwrite it at 75% LTV. But so we want to achieve a 1.2 times debt service coverage at 75% LTV, and then have cash flow sufficient in year one to pay our investors a 6% cash on cash dividend distribution. Pretty hard to find them, especially these days. Interest interest rates being where they are and sellers not, reacting. We've been waiting and waiting and waiting for this massive distressed real estate to come on the market. And I'm like,
Yes.
I'm ready. I'm ready.
Yeah, right.
And I think we're definitely going to see it in some big city centers. I'm not convinced it's going to be everywhere.
Yeah.
There's going to be there's always some distressed real estate.
Do you think
But
you'll
that's,
see it?
that's kind of our parameters. So.
Yeah. Do you think you'll see it where you are? Because you're in the Nashville MSA. Do you think you'll see it there, or
I
what's your
think there are going to be some. I read an article last week, and I shared it with some people that Nashville rents are no longer growing.
Mm-hmm.
That's probably okay. Because they're high enough, as long as they're not falling. And there were in certain situations in certain Class B properties where they're falling, as they probably should.
Yeah.
But I don't think it's going to come massively to Nashville.
Mm-hmm.
I think some of those deals will have problems because some of them were underwritten and sold to the investors, banking on 12% rent increases for 3 or 4 years. Just like I couldn't have ever put that pro forma together with a straight face.
Right.
But that's the way they got bought. Cap rate, and then everything's great. It raises 20. Yeah, like this reminds me of 08 and 09 all over again.
Sure.
So
It rhymes.
So there's going to be some properties, as we've already seen, especially the ones that had floating rate debt.
Mm-hmm.
And so if they had floating rate debt and their rents aren't increasing according to pro forma, there will be a few. But on a wholesale Middle Tennessee, nah.
Okay.
Our other market is Huntsville, Alabama. It's doing great. I mean, they've had to put a moratorium on new apartments just while infrastructure catches up.
Got it. Yeah. All that rocket science down there in Huntsville, that's driving that.
Exactly.
I love that market. I've driven through there. That's beautiful. Yeah, you're right in the middle of some exciting things there. That's great. When I asked you about your process for going through deals, you mentioned you're looking at a certain loan to value, you're looking at a certain debt service coverage ratio. You're looking to achieve a certain return for your investors. And it was a few minutes before you even mentioned cap rate. It sounds like you're looking more at the returns that come to you and your investors before you look at cap rate. And I was wondering if you could talk to us a little bit about that. Am I hearing you right, or did I mishear you?
Well, I will certainly look at cap rate in the first few minutes of analyzing a deal. Because it's the other side of the coin of distribution back to the investor. I mean, because cap rate is just a reflection of net operating income, and purchase price. So I look at things internally via cap rate, but then when I run the numbers, because I'm running it all the way down, how does my investor see that?
Yes.
Because our investors are interested in recurring cash flow. We're not really a development house. We're about, I like to call them boring investments. They're stabilized. You're going to get a check every quarter. You're going to get a report every month, but it'll be a boring report because there's nothing much to talk about there. And that's, to me, that's what basic investing is. And you're taking a risk for sure. But so I see that as two sides of the same coin, Raymond. So.
Sure. Okay. Yeah, I'm reminded of something that was in Forbes magazine a long time ago. I talked about how people who make money in investing or in growing businesses, they tend to be in what they call the dull to normal businesses.
Yep.
Each day the same as the next. It's predictable. And that's where the growth comes. We glamorize the one, you know, the rockets, you know, that go to the moon or whatever, just shoot up quickly. But I think the country's built on, I think our economy's built on, and our businesses, the most successful businesses over time are those that are so-called dull to normal or boring, just because, you know, it takes discipline to do that.
Absolutely. When was the last time you heard about that really exciting food production company?
Right. Right.
You know, when was the last time you read anything about ConAgra? I mean, but massive company, massive profitability, you know, and just huge amounts of cash flow.
Yep.
Yeah.
Okay.
Yeah.
You do a deals we didn't do series.
I do.
And you smiled when I asked you about that. Yeah. Can you give us an example of a deal you didn't do that just makes you think, or maybe tickles your brain a little bit? You know,
Sure.
That? Yeah.
Yeah. Sometimes they make me angry because I mean, on our hunt list is always anything self-storage that's in our market space.
Yeah.
And the facility that we have in Huntsville, I mean, I didn't build it. We did buy it, and we operate it. And it's a first-class facility. We take great pride on it, on its cleanliness and its ease of operation and the security. And you know, and it's 100% full, and we're laying plans for an expansion there. So another portfolio in Huntsville came on the market. I'm like, you know, you see a deal, this one's mine. This one's mine.
Yes.
And the broker, I think they're out of Atlanta, you know, had a very professional package. I love it when they have a good broker and they all the information that you need to analyze it and put an LOI. And I spent an afternoon driving around to these various sites, and you know, I'm making a list of I'm just like, these places are dumps. They are absolute dumps. But you know, they're also full, and I'm like, this is great. There's nothing that you can't do here with, you know, without disrupting cash flow, because you know, that's sort of my value add thing. I don't want to disrupt cash flow while I'm gonna do the, and then you're in a position to raise rents. So I do all this work, and I do a full workup on it, and I talk to the broker, and you know, I come up with a price. You know, as I said, did I mention they were dumps?
Yeah, you did. Yes.
And you know, I'm putting it at an 8.5 cap rate. You know, it's and because there's $1.5 million worth of stuff that I just came up quickly that we would have to do, like
CapEx stuff,
like mow the grass.
Oh, not even CapEx.
Yeah, not even
maintenance, regular maintenance.
Yeah, there's a lot of deferred maintenance, but yes, it's CapEx related, paint, signage, but just generally taking care of the place. So I'm putting it, and anyway, I come up with a price of about $9 million on it, and I talked to the broker, and he's, you know, it was unpriced. He said, "Well, our guidance is 14 million," and I literally laughed at him, and I said, "Have you seen this place?" He said, "No, I haven't seen it." And they're, but we'll get it. And I've talked to a few other people, and they said, "Well, yeah, the storage we'll get." I said, "Well, because that's a 6 cap, so you know, I'm way outside the ballpark." Well, if that property is a 6, then mine's a 5.
Right.
And sure enough, I'm sitting around waiting to see if they get their price, because I'll put everything I got on the market. You know, if
yeah.
I mean, because it's crazy, and who would do this? I don't understand. You know, it really messed me up for you know, several days, because I don't like to be that out of line with the market. But if people are really going to pay a 6 for, you know, a property with lots of deferred maintenance, and you know, they're thinking, well, but look at the rent increases you can do. Yeah, I'm not going to pay you for what I do.
I wonder how many cases, how many times people are doing that. They're paying a 6 cap on a property where your underwriting came back at an 8.5 cap, and they just didn't see it. Like, you asked the guy, have you seen the property? He had not. You took the afternoon to go drive there and explore it. But a lot of people are just looking at pictures and punching numbers into a spreadsheet without putting their feet on the ground.
Yeah. Yeah. Even the pictures in their offering memorandum looked pretty bad, but this was my area, this was my market, so I did go and and I really wanted the deal,
right?
And so we did put in an offer, I think at 9.2 million, and we haven't heard anything. They just had a call for offers last week, and I'm just fascinated to see. I've had a few deals where they're like that, and then 6-8 months later they come knocking again, and we've actually followed on and closed on some of those deals.
Yes.
Because sometimes these sellers, they need a half dozen or so people to tell them what their property is really worth. And then I tend to be very detailed in my responses, and this is why I did what I did. Never condescending,
right?
This is the basis of my analysis and why I made this offer. Because I'm not just bottom fishing. I'm really just trying to come up with a fair price. Because I'm going to pay them $9 million and then turn around and spend another $1.5 million, $2 million, getting it to the point where I can then raise prices.
Right.
So I'm in at 11, and so anyway. That's one. I did a post on that. I don't think that one's come out yet, but but that one's still fresh in my memory, and still irritating me.
Yeah. And it sounds like you're turning that irritation into something positive moving forward. You'll have other deals that you can apply.
Yeah.
Excellent.
Yeah.
We're coming towards the end. There are a few things I want to ask you, like something that came up, something that you're doing beyond real estate. You're a member of the board of the Freedom Business Alliance.
Yep.
And certainly and I was wondering if you could tell us a little bit about that.
Yeah.
That's human service and service to humanity from what I see there. So I'm wondering if you could share a little bit.
Yeah, thank you for asking about that. So I became quite moved about 3 or 4 years ago when I started finding out about the real problem of human trafficking in the United States. I mean, we've all heard about it, and you think that's something that's Southeast Asia, or that's Africa, and then I realized, from listening to the speaker, that there is a human trafficking, freight line essentially that runs up and down I-65, which is where I've spent all my life. I-65 from Mobile to Nashville, and they go to Nashville because you can get to everywhere else in the country. You can hit I-40, I-75, all that kind of stuff right there, because Nashville's a major distribution point, not just for human trafficking. So anyway, it just really hit me. So what the Freedom Business Alliance is, think of it as a trade association for people who run a freedom business. What's that? A freedom business is a business that is organized to help people who've been trafficked get out of being trafficked. And so their business focus is not necessarily profitability or growth or whatever. It's really to help a certain class of people, but they are businesses. They do intend to be sustainable, and it's business because a lot of these people get trained and they provide a valuable service. So we actually have a website that sells products that have been made by people who were formerly trafficked. Many of them are beautiful craft type items. But one of our members is also an employment agency, very direct, but they provide a level of training well beyond what most job training, because when you come out of that lifestyle, for many people, they sort of come up thinking it's normal. You're
Oh,
dealing with a woman who might be 30 and she's been trafficked since she was 12, and it's some of the stories about how difficult it is to convince some of these people that that you're being victimized. I mean, the stories are horrible.
yeah.
So yeah, I can't go to Southeast Asia. Yeah, I can't go to Latin America, Africa, or India. But I'm a business guy, and I can help some of these people stay in business
Mm-hmm.
through advice and accounting and stuff like that. So that's why when I was asked to join the board, that was my motivation to do that. And so yes, we post every Friday Freedom Friday stories, which is a true story from someone who's made it out of trafficking and into mainstream life.
Right. And
Thank you for asking about that.
you're you're creating some positive endings. That the story may have started off very dismal, but through your work, you're creating some positive endings using
That
your
is the intent.
skills.
Yeah,
Yeah.
that is the
And
intent.
I like what you said. The objective of these businesses is not to produce, a certain monetary return on investment. Rather, the return on investment comes in the form of the freedom of the people who are coming out and letting them to know, no, this isn't normal. Yeah, in the case, the example used of the woman being trafficked from age 12 and is now 30. No, that's not normal.
No,
Mm,
but they don't know any different. You know.
yeah,
Yeah.
yeah,
It,
yeah.
it it's awful stuff. But and of course, then that movie came out this summer that was really about the human trafficking. You know, it, in the United States, which is awful.
Yes.
As it turns out, it's kind of like the drug problem in the United States. The reason we have a drug problem in the United States is because there's a lot of demand for the product,
Yeah.
and so you got the same thing with human trafficking. So you have individuals. 85% of them are women. Uh, you know, are trafficked to the United States because
Mm.
there's a demand for that. And I think awareness is. I was like, lived here my whole life. I've never heard of any of this until just a few years ago. And then, so anyway, trying to do what I can to help.
Yeah.
So
Yes. Yeah. It's good that people like you are there to help turn this around. So hats off to you.
thank you.
Yeah, much appreciated. Much respect to you for that. We're at the end of our time together. This has gone really quickly, Stewart. I enjoy listening to you because you have so much going on. Everything from what you're doing as a CPA and as an investor, and what you're doing to help people, as you mentioned. As we wrap up, I would ask you, what are you reading right now, or what podcasts are you listening to right now that you use to sharpen your brain and keep yourself up to speed on what you're doing?
Well, I do regularly listen to Hunter Thompson's podcast. I
Yes.
love the guests. He has always a very high level of guests. But
Mm-hmm.
of course, I listen to ROI Clear all the time. I mean, I'm just waiting. You need to up your production level. Um,
Thank you.
reading, reading. I find that I read Who Not How a couple of times a year because
Mm,
I am I'm an entrepreneur. I am a
yes.
classic. Oh, here's a problem. How do I need to solve it? And I'm having
Mm,
to retrain myself. No, it's not how, it's who needs to solve it.
right.
Because
Right.
I'm at that place where I can't do it all, and so
Mm,
I've had great success out of delegating in the last 12 months, and it's a freedom place to be. Trust doesn't come easy to me. I trust
Yeah.
most in my own efforts, but
Mm-hmm.
then again, it's the force multiplier. When you do find people, and that's the hard part, finding the
Yes.
right people in the right seat, and that's a subjective process, is
Mm-hmm.
hiring the right people.
Oh,
But when you
yes.
do, it's an amazing thing. Yeah,
It's a home run.
it is. It is.
It's a home run. Yeah. Stewart Heath, it has been a pleasure speaking with you today here on the ROI Clear podcast. Thank you for being with us.
Thank you for having me.